Welcome back, dear students, to our financial institutions and regulatory bodies for today's fourth session of the chapter, An Overview of Financial System. In this session, we're going to learn about the financial institutions that is pertaining to the banking institutions. Financial institutions can be learnt under the following headings: one as central banks and secondly as retail and commercial banks. Central banks are the financial institutions responsible for the oversight and management of all other banks. In fact, we regard central bank as the apex bank of India or apex bank of all banking institutions. In the United States, the central bank is called as Federal Reserve Bank, which is responsible for conducting monetary policy and supervision and regulation of financial institutions. Of course, for any country, central bank does perform all these activities. Individual consumers do not have direct contact with a central bank. Instead, large financial institutions work directly with the Federal Reserve Bank to provide products and services to the general public. So, of course, so if the transactions are happening on a larger scale, every individual transaction cannot be handled by one single institution. So, they are going to expand the activities by establishment of additional units. Retail and commercial banks is an opportunity where the central bank is going to expand its activities to reach for each and every individual in need of funds. Traditionally, retail banks offered products to individual consumers while commercial banks worked directly with the businesses. Currently, the majority of large banks offer deposit accounts, lending, and limited financial advice to both demographics. So, of course, in order to carry on their retail banking, they need to carry on both honoring the deposits as well as extending the loans. The products offered at retail and commercial banks include checking and savings account, certificates of deposits, personal and mortgage loans, credit cards, and business banking accounts. So these are different ways in which the bank is able to reach different needs of the public. Third one, internet banks. A newer entrant to the financial institution market is internet banks, which work similarly to retail banks. Internet banks offer the same products and services as conventional banks, but they do so through online platforms instead of brick and mortar locations. So this is definitely a most welcome facility. Of course, it might have been a difficult way to attain today's level of internet banking, but internet banking has been most successful in carrying on the business activities. Today, with the digitalization of the whole country, we can say that banking institutions have got more rapport to reach to the people even at the most remote areas. So internet bankings are providing equally the same number of facilities which otherwise people would have obtained it physically. So with the expansion of the economy, with the expansion of more and more activities, people are getting more occupied and finding less time for carrying on the physical banking activity. So internet banking was most welcome by each one of them to carry on their personal banking activities even in spite of their busy schedules. Under internet banks, there are two categories: digital banks and neobanks. So, digital banks are online platforms affiliated with traditional banks. However, neobanks are pure digital native banks with no affiliation to any bank but themselves. So maybe this can also be given an example of agency facility, not by the banks but by the outsider taking up the banking function. So what we call it as outsourcing. Today even banking institutions have grown so much, they are carrying on many of their activities through outsourcing function. Credit unions. They serve a specific demographic per their field of membership, such as teachers or members of the military. While the products offered resemble retail bank offerings, credit unions are owned by their members and operate for their benefit. So we had seen only cooperative societies which will run on commercial basis to carry on their business activities. But today, credit unions have been created to carry on banking activities by the group of people with similar interests. Savings and loan associations. Financial institutions that are mutually held and provide no more than 20% of total lending to businesses fall under the category of savings and loan associations. Individual customers use savings and loan associations for deposit accounts, personal loans, and mortgage lending. Something like the cooperative societies, which will channelize their members' savings into deposits or investments in their own business activities, could be the best example of this. Investment banks and companies. Investment banks do not take deposits. Instead, they help individuals, businesses, and governments to raise capital through the insurance of securities. So, insurance companies, traditionally known as mutual fund companies, pool funds from individuals and institutional investors to provide them access to the broader securities market. Robo-advisors are the new breed of such companies enabled by mobile technology to support investment services most cost effectively and provide broader access to investing by the public. So any organization or institution, if it has to grow, it need to take the support of many of the other intermediaries, and today the robotic technology have become a boon for expansion of banking activities. Brokerage firms. They assist individuals and institutions in buying and selling securities among available investors. Customers of brokerage firms can place trades of stocks, bonds, mutual funds, exchange traded funds, that is called as ETFs, and some alternative investments. So, whenever we have more and more opportunities for expansion, we will be getting more and more opportunities for establishment of businesses. So, these brokerage firms are new opportunities for establishing another commercial or economic activity. Insurance companies. Financial institutions that help individuals transfer the risk of loss are known as insurance companies. Individuals and businesses use insurance companies to protect against financial losses due to health, disability, accidents, property damage, and other misfortunes. So, insurance companies are the ones who are going to work on the policy of spreading the risk of one individual over a group of individuals. So, by collecting a nominal amount as premium, they're going to assure the coverage for risk involved. Mortgage companies. Financial institutions that originate or fund mortgage loans are mortgage companies. While most mortgage companies serve the individual consumer market, some specialize in lending options for commercial real estate only. So the moment we call it as a subsidiary of banking institution, they need to complete the basic primary functions of borrowing and lending. So the mortgage companies, which are a subsidiary of banking institutions, will also take up the specialization of lending options apart from gathering the borrowings. So dear students, this was been a third session which you are attending. Thank you.